Welcome, it's the Market Sniper. How are you doing? Well, another day, another high. The garbage investment that Michael Saylor was telling us about keeps making new highs. Isn't that fascinating? We're sitting here at gold on the daily time frame, and it is just traded 3,086.96. That's right, going on 3,087, soon to make the 3,100, one might imagine. Wow, what progress. I was expecting a bigger pause over here. We just got a somewhat of a pullback here. It squeezed again, and next thing you knew, it was smashing and making new highs. So strong is the up move that even the pauses at quite big targets are yet to make any meaningful dent in the progress of the garbage investment that happens to be real money, gold. That's right. So, by the way, we did a chart, in fact, following Michael Saylor's rather interesting insights to see on any asset category from commodities, indices, bond market, we included the TLT, and soft commodities, since 2000. So assuming you've had some history, you've existed in the 1900s, how have you performed since 2000 till today? And here's what we found. Number one is actually gold. That's right, 968%, 958 on this chart. It's actually higher now with this recent move. This was done last night. Second was a soft. Let's take this and highlight, by the way, that soft called cacao suddenly came. You can see it over here. It's traded a bit lower than gold now. It had a bit of a zigzag, but boy, did that suddenly come alive. When did it come alive? It came alive round about here after the events of 2020. Let's have a look at another soft while we're at it. Robusta coffee. It also super came alive, around about there for fourth place. Fourth place, Rob Coffee. Silver was essentially, let's clear the face up, ahead of Rob Coffee, but behind of cacao. Cacao, very big spike since 2020, as I've already highlighted already. And Robusta, also kind of a big spike recently. So that brings us to this notion. What are we actually looking at here? We're actually looking at the destruction in debt and fiat value that has seen soft commodities that are supposed to be disinflationary because the technology in growing beans gets better crops, more enriched, better soil management, greater scale, bigger farmers, more tools, harvesters compared to horses and plows. You know, you get the vibe. Well, Michael Saylor says, as technology grows, supply will go on infinitely, etc., etc. In short, commodities, garbage investment, king of them, gold, garbage investment. Well, how wrong he is, because you get diminishing returns. You get a concept that a large amount of technological gains have been made, and you're waiting for a major quantum leap, because at this point we're about as efficient as we're ever going to be on scaled farming. That doesn't mean all inventions have happened, and yes, more potential for getting better, but in the meantime we're in a parabola of debasement of money and debt system, and that's why we included the Dixie black chart over there and the TLT in red, which happened to hold number 9 and number 8 position, and the TLT, which at one point was well over 100%, round about 2020. Fancy that. That year keeps popping up, isn't it? Boy, isn't that going to turn out into a seminal year for many things. The year the bond market turned 7% after being 100+% for the 25 years. It's 25 years. This is your quarter century update, guys. We're covering this with you. I was a younger man in 2000, and this is your quarter century update. Boy, oh boy, how's it looking now? Well, Dixie is minus 4.83. That's right. The dollar, in terms of its value compared to the other basket of garbage, none of this, by the way, adjusted for inflation. The compounding effect of inflation, which is well beyond the BLS stats, closer to what shadow stats represent. None of this is adjusted for that. So if you've done 7% in your bond portfolio over 25 years, you have gone so badly backwards. It is shocking. You need to take at least on a BLS stats, I would imagine an average of around 3 or 4, per annum, compound that. In a true world, in terms of shadow stats, I think you'll be compounding a far larger number. Compounded 25 years. Boy, oh boy, does that number grow fast. Wow, it's super destructive. We should actually have put in the CPI on here because it'll highlight how the debt and the fiat are losing value in a staircase fashion, one step at a time. 2020 was the great collapse in the bond market for the US. We're going to get there for the Europeans. They're going to have a further collapse as their rates push up higher. But while that happens, their currency will go stronger because it's a seesaw. When the one leg really advances in its loss of value, the other one dips down. So we had dollar strength while the American debt markets were collapsing because they're being measured against other weak currencies just in a different stage of the same cycle. Okay, so what else? 8 and 9 are absolutely awful, and that's Dixie and TLT. Number 7, the SPY in purple. Yes, there we go. We're in purple here. Let's go do that. We take that box away. Sorry, we don't want to see that. Purple is at 297%. I'd love to know what Shadow Stats' inflation rate compounded over 25 years, but I think that's okay, probably positive, but not necessarily by much. And in fact, if we have real double digits for many years here and there in patches, potentially you could in fact be barely holding value. That's where it could be. You could be either side of just losing or just gaining. Then we have number 6, which is in actual fact the Nasdaq. That's right. High grade copper actually surpassed the Nasdaq on performance recently on the 25 years of history. By the way, this is a handful of products, commodities, assets, classes. It's not a conclusive list. This is already a busy chart. Come on. It's already a busy chart. It doesn't include anything that didn't exist in the 1900s. Okay, you had to exist 1999 or before. Notable omission that many will be shouting will be Bitcoin, and I'll come back to that in a minute. Then we have number 4, the Robusta bean coffee. Now you always get told, oh, but the coffee's up because drought, because bad luck, stuff happened, landslide, whatever. But actually coffee's grown all over the world. It's grown all over the world, and all over the world doesn't simultaneously have a drought or a flood or bad luck. And same with cacao. And in actual fact, since 2020, there's Robusta over there at about 60%. That's what it did subsequently since 2020. And of course, we've got cacao here, which actually come in at number 2, ahead of silver. That had a similar trajectory. I'm getting my browns confused, but we're probably somewhere around there. So you've just got 2 softs that absolutely threw it up after the proliferation post the CV19 events. Not to mention that gold itself, yes, it had a go sideways period for a couple of years before going into a full-blown parabola, because that right now, as we look at the monthly chart, friends, this is in the parabola. I always get people ask me, when's reset? It's happening. It's happening. This is your debt debasement on every level, happening in front of your very eyes that you're not even seeing it. It's the sleight of hand that you don't realize. There's the 2020 year, by the way, which was an absolute mooner. You could see silver was round about there back then. It's now up top there. You can see the S&P was round about there. It's now up there. You could see the dark brown that I think is our Robusta. It's up there. What a gradient that is, by the way, for the softs. Your other brown, which is our cacao, the slightly lighter one, was round about there through to here. What a gradient that is since 2020. I mean, since the debt market ended its bull market, and you of course see TLT throwing it down. It didn't throw it around straight away at 2020. Remember, the bond market got super high valued in 2020, round about March. So it's about there. That's the high point of the bond market. But very shortly after that, after the effects of that, the proliferation of currency in terms of the debt that was created has put this on a downside trajectory that will see that drop from the plus 7% to a negative number. That's before you rebase it for inflation. Wow. Wow. So copper, a semi-precious metal, yes, they steal it in certain places. They hook it up to cars and pull the wires out of electric wires out of electricity grids. Copper is outperforming even the NASDAQ for the 25 years since the dot-com crash. Probably fair to say. So it's at a low point for the NASDAQ that it occurred. Silver in third place. Silver in third place ahead of Robusta, but behind cacao. So in actual fact, first is gold, third is silver, fifth is copper. Three metals. The last two with industrial components. Copper very predominantly industrial, silver part industrial. Quite a significant part. Very few pure silver miners, by the way. And then the first of the major soft runners, cacao at number 2, coffee at number 4. Boy, oh boy. And the indices aren't doing quite as well as you're led to believe since 2000. They aren't doing quite as well relative to gold that you've been led to believe. In short, the statement that the S&P is outperformed gold by a multiple of 2 would not apply to the quarter century since we entered a new millennium and a new century. It does not apply. Gold is hammering both the SPY and the NASDAQ in terms of its outperformance. So the best asset or commodity that's been in existence from before the year 2000 is, for all intent and purposes, precious metals. Gold is your winner. Okay, with that understood, by the way, pure gold link, if you're outside Australia and Nigeria, order utilizing the pure gold. If you're in the US and you prefer a local guy, ITM trading, link below. And by the way, if you're trading and you want some good leverage, you've got some crypto you want as collateral to trade traditional markets, yes, sometimes it's the other way around, or crypto has as collateral to trade crypto markets, I use SimpleFX. Thank you for the multitude of you that have done that. It has actually trickled through to me, and I appreciate that. You're saying thank you in the kindest way by utilizing the links. And the same goes for SCM, Scandinavian Capital Markets below. So you've got 2 bullion dealers for European zone and most places in the world, and the US specific. You've got SimpleFX that I'm using at the moment, ideal for Korean won. I'll mention it today, but we're going to do a full video on it later. You can trade it there, and you can trade it on Scandinavian Capital Markets, which gives you Sweden as a very safe domicile zone, but outside of the Eurozone, where a little bit of extra leverage is still available to you beyond the controlling nanny states of Europe, Australia, etc., etc. By the way, if you have entities and you're American, we even have an option where you can get a Panamanian entity and open your Scandinavian Capital Markets account with that. And get access to that leverage. Okay, so that's what's been going on in the world. Let's go and have a look at the live charts right now and see what's been going on the shorter time frame. So dollar is in fact quite a bit open up today since I did that. I want to actually show you something else. How gold, let's go back to the one that had all the lines on it. So it's actually 970. So at the time I was showing you 954. Just in a day, we've gone from 954 to 971.8. Call it 972. That is how much it's overperforming. You can see the cacao is behind it. You can see silver is separating from the pack a little bit now, moving on to 552. In the end, it beats gold. This is how it rolls. So as a reminder, on a half bull, not the full bull, when we go full crazy, this is what silver does compared to gold. That's gold. The lower one that ends up, the higher one, is silver. And that is not a full bull market. Go and see the 1918s for a better idea of that. So in actual fact, the exceptional case of cacao aside, the precious metals, right the way through to the industrial metal of copper, which is this orange one, 505, over, which is 6 times for copper in 25 years. It's not bad, actually. Put 100 grand in there, you'd have 600 grand today. You've probably beaten your inflation number with that, even with a slightly higher inflation rate. So that's decent value retention on that. But gold at 970, that's 10.7 times. And we are just starting, good people, the real full-blown parabola. This, you think you're missing it. This is getting ever quicker. This is the quickening, and this is your collapse. This is your reset. All these charts going parabolic. This is your reset. That is your reset. All these charts, now the hyper-valued stock markets are not giving you the same hockey sticks that the silver will in time. The gold is already giving you. The cacao is already giving you. The Rob coffee is partway to giving you and going at a very steep rate in a very short time. And even your copper doing pretty damn well. This is your devaluation of money staring you in the face. Again, if I draw that 2020 straight line up there, everything's from to the right. It's not so straight and not so beautiful. It's just showing you how disorderly quick this thing is getting, and it's barely begun to unwind the fullness of the leverage that is out there. Okay, that's the point that I wanted to make. Don't be fooled by the garbage callers at all. There's silver. Point to be made on silver, by the way. Point to be made on silver. We're the Friday. This is being recorded 28th of March, Friday. Thank you, by the way, 28th of March. It's going to be a birthday present for me. That's right. My birthday is between now and the weekend. I won't give you the exact day, but you guys took me through 80K. That's amazing. Thank you so much. Truly appreciate you all. Smash the like for yourselves for helping us get the numbers and sharing and helping the growth. Isn't that phenomenal? I truly appreciate it. I mean, started the channel way back in 2009. It's absolute delight to get through the 80K level. We're super chuffed about that, and we're glad to have you all watching and hopefully gaining from this. So the point back to silver is the following. You have to go back 13 years. And if it closes any higher, and here's the question that I was building up to. We're a Friday. Are we going to get a late US slam Friday, or because the last day of the month is actually the 31st, be 28 Friday, so it's 29 Saturday, 30 Sunday, 31 on Monday, 31st is Monday. Will we get slammed on Monday or Friday, or will it not get slammed at all? Nobody's in a position to put new shorts on. It's going to be a very interesting first quarter close. By the way, while I was talking, this is the second recording, by the way, this first one didn't have volume. You can imagine how I effed and blind doing it over again. While I was recording Mark 1 without the volume, minus 2.8% GDP, not minus 1.8% US for this first quarter. So they're going to have an absolute fail of a first quarter. They've decided to make it worse. They've adjusted their forecast for GDP for this first quarter. Now, 2 negative quarters is a recession. We already did that. But they said, during the Biden era, hey, it's not a recession. There's too much employment. You can't have the negative quarters and be in a recession and have such a great job market, surely. New criteria established. Only it was Biden and his cronies and the treasuries hiring a lot of government status workers to mask the fact that a lot of private companies were letting people go. So they actually did a lot of not for profit, not for high use, DEI, transgender consultant hiring type jobs. And that masked the fact that the unemployment number was actually growing. The net employment number was actually turning down in favor of unemployment. So they said it's not a recession. Well, you get this one. I think they're going to make it a complete washout of a quarter so that they can hopefully get all the bad stuff out, and they're going to try avoid quarter 2 being negative as well. So if you're going to have a bad month, make it a really bad one and set a low bar so that at least you can have a better one in the following quarter. 2 quarters means you hit the recession criteria again. Coming soon, non-farm payrolls. You can watch it with us, live trading day. Watch out for the link on X for us to join us to see the unemployment number, a lagging indicator, the leading indicator that is, you guessed it, the inverted yield curve, triggered some time ago, and we've been on Red alert for a demand-destroying event, disinflationary vibe. I think crypto won't go up unless it's they first have a major washout. They need fresh liquidity and fundamentals and reasons. However, the bond market won't allow the same scale they got away with last time. Boy, oh boy, we might need a war. Who knows? A big war. Oh dear, that's what's concerning me. So this is 13 years ago, friends, that we last at a quarter level had silver at these heights. That's 13 years. That's the handle on a cup and handle. Many technical pundits will tell you. It's also an ascending HVF. Remember, there is a CPI adjustment that tilts that into being more of a symmetrical triangle, which is what we do. But either way, those are both very, very bullish patterns. And silver is, for the first time in 3 years, high. And we see it getting at least up to these critical levels that have been critical before, in and around the 45 to $50 zone. Before, it might have a little bit of a think as to whether it's going to smash it. But if it decides to smash it, it could rip. It could absolutely rip. So that's the update on silver. We also, when we talk about gold and silvers, we always have a look at the gold-silver ratio. So let's go straight there. And you can see that we've been stuck at the 90 level, and it's only 1 point before that we didn't get rejected at the 90 level. In other words, people are buyers of silver at the 90 level. You too should be. You can also use bullion vault link if you've got small amounts of money. I know it's hard. I know for most Americans and most UK people it feels like a recession. It is. Start saving, even if it's a $5 that you save, a $10, a $20, a $50, a 20 pounds. Go and use the bullion vault link. There's no minimum. Accumulate silver in your name and favor. You'll get the upside. When you get up to a few thousand, you can trade it for the real thing and have delivery. You can sell out of your bullion vault and go to pure gold and purchase silver. Or you can go to ITM trading and purchase silver. And in the meantime, if you learn HVF method, you can use SimpleFX and SCM as trading platforms to join us. HVF trading. So remember, the key thing about this time, guys, you've got to build wealth. You've got to preserve your wealth, and you've also got to ensure your freedoms going forward in what's going to be a totalitarian governmental vibe, an absolute scavenge mode for tax. Oh my God, the UK. Their finances keep blowing up. I was watching Sky News from afar, watching how they're going to have to be new tax hikes, new bad news, and the trade war. Oh, and that's going to cause this, and they export cars, and now they can't do that. Oh, and this and this. Nobody prices for downside. They left themselves no wiggle room. The lady Rachel left herself 1/3 of the wiggle room that George Osborne did, and he had to dig deep in that. Boy, oh boy, there's more tax cuts coming. There's reductions in services. There's even tax reductions in welfare. Jeremy Corbyn is making high value out of the fact that a Labour government is actually reducing welfare. And of course, we've got our friend Gary's Economics. Now, I don't want to give him too much more publicity. I think we've done a good job of debunking him, but let's just finish one more thing. In fact, this is almost a bit of fun. He appears to have an image consultant. I don't know if you've seen this. Have a look at this. There he is in his leg warmery type socks that are red and white. He has these on all the time with Adidas tracksuits and trainers and these legacy retro Adidas trackies, and then the Liam Gallagher, is it not? It's Liam Gallagher of Oasis, the Marks and Spencer's type black overcoat with the skull hoodie. It's like he has no other clothes. I mean, you have an image maker that's making you street and making the world a better place. When you got Gaza. Gaza is short for Gary. It's got nothing to do with Gaza. It's got nothing to do with anything else. People getting confused. What you talking about? Gaza? Yeah, no. We're ripping his name off. Gary is called Gaza, and not to be confused with the legend football player that was also Gascoigne. But anyway, it's almost unfair to Gascoigne to call him Gaza. But anyway, that's what we mean. Those leg warmers, guys, I mean, note the one leg hiked higher than the other. I spotted this and I said, where did I see that before? Who does that kind of thing? A little bit of fun for you. It turns out the people that hoik one leg higher, you guessed it, that Star of David, Boaz and Joachim, step on the black and white tiles, my friend. You're at the first level, the first degree of Freemasonry. That's right. What a twat this guy looks like, I have to say, with his mask and his hoiked higher one pants. Well, that's how Gaza, or Gary's economics, is starting to look to me, with his image consultant so that he can appeal to the working class people. He was on Question Time on the BBC. There isn't a show this guy hasn't got on. I mean, he is literally ripped through everyone, and his YouTube to the moon, 800,000, 900,000, probably run 1 million by the time we next check. And all he's talking about is tax the super rich. Now, if it were that simple, I'd be super happy. Listen, take all the money from the Rockefellers and the Rothschilds and all the legacy families, BlackRock, everything. Take it all. I'd love that. Take it all. Take a massive chunk. Guess what actually happens? What actually happens is you tax assets once, and everyone's going, yeah, we're tax assets. We can get 25 billion if we take 3%, and then we can do it every year, they're saying, 25 billion. The UK needs such bigger cuts than just 25 billion. But 25 billion would help. Not going to say it isn't, but it isn't going to save you. And guess what happens? The next year, those assets aren't there because they are. When you tax assets, the only thing that's really fixed and can't move is the property, a home, a house, and you start taxing that, their prices go down real fast, there's a glut, and there's a whole bunch of people that bugger off. And then you what? Taxing their shares? Well, those shares become held by foreign entities and offshore companies. You never get to tax them. I can tell you now, Rockefellers and Rothschild and the legacy families are the people that extract tax from others and benefit from it. They are not payees of tax. That is very juvenile to think that you're going to be able to do it. And he's saying, well, 10 million and above, 10 million and above. Watch out, 10 million and above quickly becomes 500,000, 750,000, 1 million and above, 2 million and above. Tax assets. And the people that can move will move. It is not a plausible plan. It doesn't raise the money you think it does, and it chases all the talent away. They move their head offices, they fire the secretary, they fire the janitor, they fire the general manager, and they re-head office somewhere else, and you become a branch where previously you were the primary place of business residence. That's what happens. So anyway, back to our gold-silver ratio analysis, and we're done with Gary's economics. But don't be surprised. What is he serving? What's the role he's serving? Here's my opinion, and I'd like you to leave your opinion below, because I'm kind of interested. I don't know, but he seems to be funded by open democracy. So guess what happens when you open democracy? You're not angry about all the immigrants that are being mass pumped in by those Israeli and Hebrew named agencies. You're not angry about that. You think they're entitled to come. And you're for the working classes that is angry, and you want to channel the anger towards the middle classes, because that's who will end up paying the taxes. The middle upper, the people that can leave will leave. They're all internationalists, your cabal, your banking cartel. You only have to look at Carney, who was Bank of England head, who was previously in Canada. Now he's back there. Hey, he goes wherever he goes, and ever he's needed. So what clearly is going on here is that there is a Marxist push. You've got Miliband, son of a dyed-in-the-wool commie, Bolshevik commie. We all know what the Bolsheviks did. They want communism. They want to create a culture of envy and direct the anger. They're working really hard at directing the anger. You should pay. The person who made a little more money should pay. Oh, we don't want income. We don't want to tax working people. You're going to increase the tax on working people. You're going to definitely do that because you've got them by the balls. They pay as you earn. They've got salaries. They can't leave. They can't leave the job. The job takes it at source. It's the best situation. The small businesses, they generally can't leave. You've got a little laundromat and all of that. It's tough. You might have to go buy a chain in a different country where you get to keep more of the revenue. That's going to be kind of hard. So it's going to be income taxes for sure, and he doesn't understand the difference between income and asset taxes. Assets will disappear. 100% they'll disappear, and that's what's going to happen. It's going to end up falling on the middle classes, but they're going to embrace Gaza, who is a pro-taxation. That's the message. We want a pro-taxation fool that's going to tell everybody else that their lives are going to get better. We're going to tax you to greater wealth. We're going to tax the rest of the nation so that you get greater wealth. Meanwhile, no one talks about the cartel that devalued the money, which brings us back to gold and silver and the gold-silver ratio. So we're in a bit of a stall box here. There's only one event where you went meaningfully through the 90 level, and that was, wait for it, that key event, we shut the whole world down and muzzled them up and spiked them up. That's what we did. By the way, all the strikes we got on these channels, our other channels that killed Reset Sniper, were misinformation, have all subsequently been proven to be 100% accurate, and we did the right thing in guiding people not to do certain things and definitely to do others. But that point aside, the big collapse came down, down, down. After that, when you get an overreaction to the high side, you certainly get a dip to the downside. Every time you've come to 90, you've sold off. Generally, you've sold off meaningfully. I mentioned this before in a previous video, so we're going to have to see. It's bouncing around. It could bounce around. If we get a demand-destroying event of different form but similar variety to the CV19 event, you could shoot higher out this box. But were you to do that, the end result is going to be a deeper dive. You saw it here. Boy, oh boy, what a ride that was in differential in gold versus silver. You went from 128 to 60. That is extreme. That's literally a halvening. So silver went up twice as fast as gold during that period, and I think we're going to outshine that. So it is possible you can go out the top. I'm not saying you can only go down here. There is this basing ascending grind line. That's the red line we drew. Let's just show that one. There you go, you can see it there. That suggests a moment of truth is going to come. You're going to have to keep crawling up that line, or you're going to square across it, break down from it, maybe a return move and come back up. We'll see. But at some point, one of two things happen. It gets more expensive, gold gets relatively more expensive, and then if that happens, when that turns, it turns violently. And as we've said, we're calling for single digit, that means 9.99 or smaller, gold to silver ounces. So we're saying below 15 in the extremity event, which is going to have huge repercussions for the value of silver at that moment. And you are in reset. However, I think the silver surge comes post the trauma event. In short, we are waiting for another red box. We're waiting for another red box to occur, and we think, listen, it could occur here. We don't think it's far away. When that occurs, you want to be absolutely buying every silver ounce and expect it to be hard, because they could be taking your money, cutting your job, shrinking the economy. By the way, negative quarter America, first of all, cut from minus 1.8 to minus 2.8. They want to get all the crap in one quarter, and they're going to cut more jobs, more status jobs, and they're going to continue to add tariffs. So the whole world is going to go into a bit of contraction. Open borders caused expansion. Now we're going to go into contraction. Of course, we bifurcated the supply chain as well, and the taxes are going up and up. Trump wants more of it made locally because Americans need the jobs, and he doesn't want to see such a big trade deficit. The deficit, oh my God, the deficit. I should find the tweet actually on that one. Excuse me, I'd forgotten to mention that one. Let's just go. Follow us on at the Market Sniper, by the way. Please don't forget that one. You should absolutely be doing that. By the way, isn't it groovy that these guys said we had a positive ID of him walking into his girlfriend's building and now it's collapsed. They bombed the whole building because one guy they wanted to hit visited his girlfriend and they had their positive ID on him. That's called collateral damage. It's not even called collateral damage. It's called murder. It's been, and Mike Waltz, yay, USA, red hot, awesome, isn't it? Wow. That is unbelievable. That is so unbelievable. These guys, every time you hear the word precision strike, this is the bullshit of how they actually talk. They tell you, and Glenn Greenwald is credit for highlighting that. You know, if a Yemeni and a Palestinian decide that there's a general they're after, and he goes and visits somebody in a 12-story apartment and they destroy the whole thing, we'd call that terrorism, I think. Anyway, that's not what I wanted to show you. By the way, something else. While we're doing a deep drop, this lady, ex-married to the you-know-who that was head of Google, that founded Google, is telling everybody, close to saying every major big tech company was created and funded by DARPA. It's exactly what we've always said to you. Google, Facebook, Apple, all of them were not Californian garage success stories that just were amazing entrepreneurs and happened to be seated right by the venture capital and got bottomless overdrafts and just innovate and innovate. Never mind about paying it. We'll pay the salaries, keep spending. You know, who gets a bottomless overdraft like Amazon got for 2 decades of negative losses continually and kept using revenues just to scale. Who gets to build a business like that? Just build a unicorn. Don't worry, we'll make good on all your checks. Apple unicorned, all of them unicorned, and Tesla is a Rockefeller unicorn. They own the battery solution to their oil cars. He also owns pharma and everything else through the Rockefeller instinct. And Musk is just a front man. Remember this, JP Morgan died. He owned less than 3% of the bank. It was all owned by the legacy families, all the usual criminals. And now you have a woman literally who is angry ex-wife spilling the beans on Google, Facebook, Apple, Microsoft, Hewlett-Packard, Oracle, etc. They are all dark state entities. Anyway, I didn't want to go the deep dive on that one. What I was wanting to show you was not even that one. What I was wanting to show you was the deficit number in the UK. The deficit, US, my apologies. So the deficit absolutely ripped. That means, what is the deficit? Many people don't understand. So you export stuff and you get paid by foreigners for your stuff, and you import stuff and you pay foreign nations for making stuff. This is one of the absolute largest deficits in an absolute age. I don't think in this modern era since 2014, which was the QE 1s, 2s and 3s, the depression that we never really recovered from, and all that fake money was printed that led to debasement and inflation later with further inflation, CV19, such was the cost. 1.775, literally 1.8 billion annualized. No, let me restate, sorry, I'm talking through my backside. 1,800 billion, essentially 1.8 billion annualized. That deficit, 1.8 billion. So it's 1.8 trillion or 1,800 billion, essentially. The Jan-Feb deficit averages 1.8 trillion versus 1.25 trillion. So in terms of what you buy, guys, rule number 1, live within your means. Sell more stuff than you buy from everybody else. What is the US doing? It's just had its biggest blowout. I mean, look at this graph, guys. There's no point where the orange line and the blue line was ever further apart. There is no point where you had that scale. That's 1.8 trillion. And they've consistently accumulated a deficit, which they've exported dollars for, which now, because it's borrowed into existence, no one wants to accept the debt for, which is a rejection also of the currency, because they go together, the USD stroke UST. Every time you see a dollar, know it was borrowed into existence and there's a treasury for that dollar. There's a treasury for that dollar. There's a debt instrument that somebody owns. And the debt instrument devalued, it will be the currency's devaluation. And that's why you see the gold chart with 97% devaluation in the dollar since 1913, that date. That's right, when they allowed the cartel to take over, and we kind of went into inflationary policies, which have been supercharged by crises. Boy, do they love a good crisis. So anyway, we're back to that chart that we were showing you, and we wanted to discuss the aspect of complete and utter blowout deficit, and that is awful. That's an awful deficit. There's no way you spin that. It's an absolute awful deficit number in every single way, and that is why tariffs, because tariffs push their cost up, you buy less of it, and make more local manufacturing down. This is a major concern on a deficit number, and the tariffs are going to continue to come out, and we will cover on USD Korean won why the only non-NAFTA nation is the most vulnerable non-NAFTA nation, because Canada and Mexico are the most vulnerable. The most vulnerable non-NAFTA nation is in fact the USD KRW, South Korea. And that could be our trigger for the great trade USD KRW, which we'll be showing you the charts for in a minute. So let's see if we can get that chart back. It's gone a little bit on the quiet side. Bitcoin, while we wait for that one to load. So we've been talking about Bitcoin's valuation against gold. And we've said this basing ascending grind line has been in play since March 13. You are now March 2025. That is 12 years. This ascending grind line has been in play. You've been hugging it a number of times below of the last bear market. You kind of had the pullback over there. Gold is going up too strong. This line breaks to the downside, has and was my prediction and remains my prediction. So there we go. This is the one I wanted to show you. It was actually Bitcoin. And we're going to show it to you on daily. We've been warning that this channel is not positive for Bitcoin. We've been warning that this channel is not positive for Bitcoin and that we expect it to fall through that. And it's doing exactly that. And in fact, if we go up to daily, Bitcoin, since its recent high, is already well over 20% down. So if I just lock that on, we take the measuring tool from the high up top there, and we run it down to there. You are already 23.4% down. Bitcoin is 23.4% down in an environment where the dollar is soft. I'll be showing you the Euro USD shortly. Gold is killing it against the dollar, and Bitcoin is going down. Bitcoin is going down. Never has assets class, if we can call it that, like Mikey Saylor's. Where are you, Michael? Why haven't you gone and borrowed gangbusters? If buying at 108 was good value, Mikey likes to buy the local highs. Why aren't you buying now? Why aren't you leveraging to the hilt and buying now? There's nobody showing up for your token right now, Michael, just as the USD is getting stronger. So that's why I think that breaks to the downside. I don't see that trend changing. By the way, we think we're winding up inside a wind up. There's a beautiful small wind up right here coming up right there for platinum, and we think once this guy gets going, he's going to leave 1700 in the dust in a very quick sense. Don't forget it. A wind up within a wind up is very, very powerful, and it'll be the first in the new trend. This will be part and parcel of going a lot higher. Platinum, 20 times more rare than gold, which is 8 times more rare than silver. Okay, that gives you a little bit of a look in on that. Don't forget about it. What else are we going to tell you about it? Well, there's the euro, and you can see that it did make the two targets we suggested over there, and a key level over here on this inverted head and shoulder that had a kind of W head. We talk about complex head and shoulders and how you can identify these structures. We had drawn it and it has performed, and at the moment now you're getting a little bit of a push up again on the euro after a small pullback post targets. So you had a little bit of a target run here, got a tiny bit of a falling wedge, I might argue there, and you're drifting up. So the dollar is soft, the euro is going up right now. Apart from that shoot up, it's actually post a little bit of a rest, working its way back up. That's not a bid for the euro, by the way. They're all equally horrible. We've highlighted that the bond market rates for Germany, Netherlands, UK, and France are all going to trade higher, meaning you're going to get paid higher interest for holding euros, meaning you're going to go up. Slightly more so, we think, than the US 10-year benchmark. So that's going to drive the currency strength into the euro in a world where they're all garbage. The debt and the currency is garbage. That's the real garbage, Michael Saylor, that he doesn't talk to you about. So what else have we got for you here? XRP, which is the one we hold great hopes for, which is statist through and through, totally controlled, courted the central banks, absolutely. Even it is rolling over a little bit. If it comes down to the $2 mark again, people need to start worrying if you may get a head and shoulder type event. The return move to the dashed line, the basing ascending grind line, is typical of technicals. Yes, you got a little bit schizo here, up and then back down, but that was certainly a key level. You've drifted up and now you're rolling over. This is looking very worrying for that target as well. That could see you fall down to the 117s and a bit below. So it's worrying for crypto. In short, I think crypto will have a demand destroying event. There's our chart that we showed you live. We expect Korean currency to do very poorly. I'm going to do a separate video on that. So the most effective nations by tariffs are Canada and Mexico, but they're all part of the North American trade area. I think they're going to sort that out. No one is going to feel sorry for a small Asian nation on the other side of the planet, and the most affected by tariffs outside of the NAFTA zone, Canada and Mexico, is actually Korea. China, funnily enough, sells to many other nations. The US is not its only client. Yes, it's a big client, but in terms of its total revenue, the percentage effect if tariffs go up and it can't sell in those countries is an inconvenience, but is not fatal. Korea, they sell the Samsung devices, the LG. Samsung is phone devices, it's washing machines, it's fridges, it's so many things. Kia and Hyundai in the motor space, which have been targeted recently in the tariffs. If this goes into household devices, white goods, and consumer electronics, South Korea is going to be in serious trouble. And the tariff wars, you saw the deficit with Trump. He's trying to fix a problem. And everyone else can pay. He needs to save America. He wants jobs coming back. He's going to make it more expensive for them. And that's going to bring major inflation, aka hyper-stagflation in our view. So you're going to stagnate, low growth, even negative growth. Q1 stats coming out, low growth, negative growth, and also stubbornly high inflation. Tariffs are going to push things up in price, and the USD Korean won. This is going to cause a halvening event against the first world currency. I think actually you could do this just off tariff wars. So we'll be doing a full video on that and bringing some facts to the table on that one. And by the way, the Kospi always goes down when the Korean won goes down. Why? Because there's a lot of flight capital in South Korea. A lot of flight capital. So in short, when people sell their shares, they take their money out too. That's why when the stock market collapses here, we're going to show this in the next video, so does the USD KRW. This, by the way, is a flag, a bad flag. I wouldn't want to see this break to the downside. It's going to be very bad for Korea. I think tariffs are going to be, South Korea is going to be the biggest casualty on that. Never mind that there could be North Korea war, bomb test, annexation by China, who knows, or any sort of other geopolitical not involved with trade. I see a very dark Korea being one of the hardest hit, and we continue to do that. We'll talk about it more when we do the other video. What else is there to talk about? The German debt market, we've already called this. As a reminder, we remind you, this is going through to 4% in our take. We will be talking in Germany with Saw Financial, by the way. Come and see us if you're a German follower and friend in Frankfurt. Saw Financial, you're welcome to come and talk to us. Germans are typically very good English speakers. Congratulations. Your English will almost certainly be better than my German, but we'll also have German support members with us in the team that are fluent German speakers. So should you wish to talk in the mother tongue, you can come and say hi in the breaks or whatever after our white paper is given, and that'll be in Frankfurt, and that's middle of May. So go and look at Saw Financial for that event, and you will find us, Saw, SOAR, in Frankfurt, coming mid-May. I think it's 16th and 17th, or 15th and 16th. Have a check us out. Come and say hello. Okay, very good. So that's the German debt market going higher. Debt devaluation, bad for the pensions. Going back to our friend Gary's economics, more tax please. Who holds all the debt? Well, the pension funds for the working class people are managed by pension fund managers who get paid to buy bonds. And you saw how those have gone. How much better they would have gone if they'd just been Mag 7 or gold, even more so now, versus the TLT. Or any other bond investment. These are about to devalue immensely, and housing market is going to get hurt with this, and that's all because must do a military industrial complex, must attack Russia, everything else that is about surely about controlled demolition. They're not that stupid to be that incompetent. It's intent. So here we go. We're looking at the rates going a little bit down on the dollar, but we have these upside HVFs in Germany, France, Netherlands, and the UK. So euro stronger generally, bias to euro, dollar relatively weak. Great for, what did this video start with? Gold, gold, gold. Did I mention gold? Gold. Did you hear it? Gold. Say it to yourself 3 more times. Gold. About to go into a parabola of advance, and silver will outperform it at some point. I suspect after that crisis, I expect the gold silver ratio could still squeak a bit higher and maybe break out the box, because we're in that red box zone again, a DDE, a CV19. The yield curve is reverted. Everything is ready. All the criteria are there. Cuts, 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 austerity, cycle, knock-on effect, downturn. That's how it goes, guys, I'm afraid to say. Sounds doomer. That's how we see it. Okay, I think we've finished with the chart runarounds for you. We come all the way back to the one and only, the precious metals. I want to say thank you for your support. We ran the 80K. Truly grateful to all of you. Drop us your comments. Is Gary controlled? Is he controlled? Or am I just a lazy conspiracy theorist that sees things all the time? He seems to get on a lot of shows. He seems to be on everybody's list. Even Zuby, my black African friend that's back in the States, he's pointing out that Gary's economics is even showing up on his timeline all the time. And he sounds very Marxist. Yes, Red Gary. It's Gary the Red for sure. Maybe I should say that instead of confusing everybody with Gaza and Gaza. So, yeah, what do you think about him? And B, what do you think about the commodities? Did that shock you, that chart where we showed who's performed, how gold is actually your outperformer so far? And do you see Bitcoin? Do you see Bitcoin falling through the basing ascending grind line when divided by gold? It's at 27. It's been as high as 38. That means you needed 38 ounces at one point to get 1 Bitcoin. Would you really ever take 38 gold coin ounces and say, here, give me your digital, non-touchable, non-tangible, vulnerable to quantum computing, created and run and managed by BlackRock and Satoshi? Oh boy, I've got to cover this before we finish. Every time a guy leaves a comment, oh, it's such a pity, you just simply don't understand Bitcoin. You don't understand Bitcoin. This is a standard maximalist attack vector. No, you don't understand. They will never let you have your money. Them that control and power over you, DARPA, set up all the apples and the amazing tech surveillance things that you don't have, batteries you can't remove, all those inconveniences that are good for them, spying on you, but not good for you if your battery runs low. You know, all that stuff, all those coincidences, those people will never look into the eyes of truth and fact. Take this for me as the damnedest fact you're ever going to hear. They will never, ever let you have your own money that they do not control. It is the end of their power. Their power is to treat you like cattle and farm you whilst living the life of Riley, living off you, putting you on the wrong side of a compound interest equation. If you think your little digital scarcity creation truly is freedom, when BlackRock is who you're waiting for to pump it up, the same one that put Shinbaum in as president of Mexico, which is largely a Roman Catholic nation, the same one that's picking up the contracts for fixing Ukraine, fixing Gaza, rebuilding every single place in town. They just seem to be really good at winning contracts. Those guys are your freedom and liberty guys. Then you are the one who doesn't understand. And actually, I watch this one YouTube channel occasionally, and then the guy is talking Bitcoin, and it sounds like he understands the soundness of money, and then he says, and then Satoshi did, and then I just go, oh my God. It's like having a conversation with an adult, sitting down with a cup of coffee, having a conversation, and yeah, you understand how the system is broken and not fixed. He's repeating it all so well and all of that, and then he says, and Santa's going to bring me pumpermentals and make me rich. Yes, Santa Santa is. And then he just turns, he shrinks into this little 5-year-old wanting his BMX at the end of the year. Every time I see a Bitcoin maximalist that goes, you don't understand, and then they say, Satoshi, Satoshi. Like, do you really think there's one person called Satoshi? Do you really think, with what I've told you about DARPA setting up every major corporation, all the people involved, that when they opened the Commodities and Futures Exchange for Bitcoin and said, we will tame Bitcoin, do you really, really think you've escaped their system? And you, your own central bank, on their digital rails, on that Microsoft is part in the Lightning Network, devs are part of creating. And that some skunk works, CIA Intel guys, matey, kicked a ball around to throw together that code that's already had an inflation bug in it, that was white-hatted and fixed. That is far from perfect, and that is entirely owned by them. That is open source blogging that offers very limited privacy so that everyone can see exactly how much wealth you have. And the main guy of the global New World Order, World Economic Forum fame, Larry Finkelstein, as I'll call him, of BlackRock, with his 100% chosen one board, is giving you and participating in this money system that is something that the people created, that he has no control over, and his mates. If you think that, then you don't understand and you failed an IQ test. You may as well queue up for your CV19 booster right now and take whatever consequences are coming your way. That's all I can say to all the people that post those comments. You don't understand Bitcoin. I understand money and power. You're right. I don't understand Bitcoin. And money and power says that ain't your freedom. Okay, with that, I love you and leave you. Hit the links below for booking a call. Don't forget, you can join us. Wealth maximization, real opportunities are coming. In these collapses, money is made fast by those that are on the right side short and the right side long. HVF method is the most reliable method that you can trade for asymmetric rewards and super tight risk management. It costs little to be wrong. You make big green, and you hold the trades for longer on the green side. You're automatically taken out quickly, no long-standing bleeding losses. This is the key element of smart technical trading, where we get to see what the insiders are doing. We find out the fundamentals later, which I'll be doing for you on the USD Korean one with a separate video to follow, probably sometime next week. Thank you for watching. Hit the like and share, and we'll get you shortly soon again. Have a great weekend.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.